Good morning, everybody. Welcome. Just before we start with the Mauritius Investment Summit, we have the pleasure to have a solo. In Mauritius, you buy one, you get one free all the time. So it's not a solo, it's a duo presentation. We have the pleasure to have Mr. Samad Jaman, Chief Executive Officer of the Mauritius Finance. And then we have Mr. Christophe Chabot, Director of Impact Mauritius Limited, that will be talking about variable capital company, VCC, a game changer for impact investing in Africa. Samad, Christophe.
Good morning, ladies and gentlemen. It's a pleasure to be here with you and to talk about something which is very important, a product which is called the VCC. So we've got only 15 minutes, and we're going to do it in a geo, as mentioned by Vinay earlier. And we'll try to be brief because 15 minutes won't do justice to this specific amazing product that has been developed. So I'm going to cover what is a VCC and its features. And after me, Christophe will come and share with you how it can be used for impact investment. So what is a VCC? VCC stands for Variable Capital Company. And on its own, it's not something which is new. However, the Mauritian VCC has got its unique features which differentiate it from anything else. The VCC actually has been developed by the practitioners for the practitioners. So it gives you a lot of flexibility compared to any other product you've seen for fund managers, asset managers, or fund promoters. So the VCC was actually enacted in April 2022, and it is a regulated umbrella structure whereby you can have the fund together with the SPVs within the same structure. So the sub-funds, you can have multiple of them. It's not only one. You can have multiple funds if need be. And a special purpose vehicle can actually be attached within the same vehicle, either directly with the VCC or an SPV directly with any sub-fund. So one of the main features of a VCC, the sub-fund actually can elect to have a separate legal personality, which means by having a separate legal personality on each underlying sub-fund, you can actually segregate your assets and ring-fence all your assets and liabilities. So once you've elected to have a separate legal personality, you can decide whether you want to have the same board or using a completely different board within the same structure but for another fund or sub-fund which is within the VCC. So if you look at a sub-fund itself, the assets and liabilities are segregated, and by having a segregated and a separate legal personality for tax purposes, in the same structure, you can have one fund which is taxed at a full rate of 15%. You can have another sub-fund which is taxed and take advantage of the partial exemption regime, which effectively is taxed at 3%. Or you can have a separate license where the fund is actually fully exempt. So each sub-fund have its own license. So you can have different parties, you can have different type of structure, or you can have different type of strategies to operate the sub-fund. So we'll move into the use of the VCC. And why do people go down the road of a VCC? A VCC is used by anybody. It can be a fund manager, a fund promoter, or equally for upcoming fund managers who want to try and test the different investment strategies. So if you look at it in terms of one of the main uses is we are housing all type of assets class, all type of investment, and the beauty of having separate legal personality, one sub-fund can invest into a separate sub-fund within the same structure, which is not allowed elsewhere within a segregated portfolio company. So the fact that it has a separate legal personality, it differentiates the product completely. And by having a separate legal personality, it gives you a lot of more flexibility. So you can even have, and it's the same structure, not only different board for the underlying fund or the SPV. You can elect to have different fund managers for each sub-fund, different service providers with the administrator, or even a different advisor for each sub-fund in the same product. And it gives you also the advantage of economies of scale. So in a fund, you might have a VCC, a variable capital company with, let's say, 10 sub-funds and 15 SPVs. You may need only one board for the whole structure, unless you decide to have a different a board for each sub-fund. That's up to you to decide. Likewise, you have only one compliance framework, one compliance officer, and one MLRO. So normally, if you're doing several funds, you will have to have individual board, individual separate MLRO, and separate compliance officers. Likewise, if you want to ring fence your assets, it allows you the cross investment between sub-funds, and it gives you the opportunity to actually operate and regulate a fund which is in a regulated a jurisdiction. And the beauty of it today, you don't have to come to Mauritius just to incorporate a new fund. It allows existing fund from other jurisdictions to migrate in a simple migration regime. Likewise, you can convert your existing funds that's already in the country from a normal fund into a VCC. So why would you do a VCC as a manager if you have already a fund? Because in the future, you're planning to do another funds, Fund 2, Fund 3 will normally come to you. When you do the Fund 2 and Fund 3, the fact that all the parties is already recognized by the regulators, it gives you the opportunity to actually set up the fund and launch it within a couple of weeks. So it's the ease of doing business and the cost of doing business, the scalability of it make it a unique product where it's attracting a lot of traction today. A couple of licenses have already been granted, and we expect this to become a very important product for fund industry in the near future. I think my time is over. I'll pass on over to my friend, Christophe.
Thank you, Samal. So I'm Christophe Chabot. I'm the director of Impact Mauritius. And we are basically here to confirm that the VCC is actually a great tool and a great improvement to the Mauritius legal regulation, and to show how we can make use of that VCC especially for first-time and second-time managers that have the project to set up a fund. And the first strong argument for the VCC is really that you can use it as a warehousing facility. This is the first challenge of the fund managers, of the emerging fund managers when creating a fund. They want to be able to demonstrate their investment expertise to the fund investors. They want to be able to create some track record. And with the VCC, you can create a number of SPVs under the umbrella of the structure. And this warehousing facility has a legal personality or not. It could have a board of directors, or it could use the board of directors of the platform. And it could also use the service providers of the VCC or select its own service provider. So again, there's a lot of flexibility in this tool, especially compared to the previous comparable structure, which was the protected cell company. It's a great improvement here. Once you've set up your SPVs and you've created your track record, then you might consider rolling over these SPVs into a sub-fund, which is also possible under the umbrella of MIFGA, of a fund, of a VCC. At this stage, within this initiative that we have in Mauritius, and we will establish the Mauritius Impact Finance Gateway to Africa as a VCC. At this stage, we would support the fund promoters in the design and the implementation of the impact fund. So at Impact, for the past 15 years, we've been establishing and managing impact investing funds with promoters such as KfW, IFC, EIB, FMO, and the likes, and with fund sizes ranging from 20 million euro to more than 1 billion of assets under management. So we developed financial models, we developed fund term sheets, we developed policies and procedures which we can make available to the fund promoter. Now, to complement, the next challenge that these fund managers would face is that the scarcity of resources. To be able to allocate sufficient internal resources to the fund management part in order to focus on deal management and origination. And for this, we complemented their expertise with fund management services. The platform MIVGA benefits from a regulated CIS manager, which provides all of the core management function so that the fund and the manager and the promoter meets the substance requirements in Mauritius. So we have a team in Mauritius doing the services based on the experience of managing more than 10 impact investing funds. Now, apart from the fact that, maybe we can move to the third slide. Apart from the fact that the VCC allows for an end-to-end solution, so allowing for the creation, for the warehousing and as well as the creation of fund and the management of fund, the VCC is also, can be designed as a turnkey solution. It has preferred partners.
Can we change slide?
Sorry? Next one, please. Yes. So this is basically the VCC, and you can see it acts as Samad was mentioning earlier. You can create SPVs, you can create sub-funds, and then you can roll over these SPVs under the sub-fund. Now, what we do provide with this platform, impact investing platform in Mauritius, is also the opportunity for the promoters to plug their investment strategy into an ecosystem. And they can benefit from all of the preferred partners, a fund administrator, Axis, an international bank, a domestic bank, an auditor, and so on and so forth.
Thank you. Thank you, Christophe. Thank you, Samad, for taking us through the VCC.